The next presentation is about a key strategic topic, the formation of the largest tower co in the MENA region, presented by our Chief Strategy Officer, Rene Werner. Before joining Ooredoo, Rene has been working for Deutsche Telekom, Axiata and eBay.
Good morning, ladies and gentlemen. I'm very happy today to be here with you to present you the formation of the leading tower company in the MENA region. We have announced this week, Tuesday, our transaction on towers that we have already signaled to you over a couple quarterly calls. Today, it's time not only to say thank you to all of the teams involved who have done a lot of work over the past 2 years, also to our future partners, to form the leading tower company in the MENA region. We will be active in 6 markets in the MENA region, and the TowerCo will serve a population of 120 million people in these markets and 20 core wireless and fixed wireless access operators. The company will be incorporated in the Netherlands and works with anchor lease agreements that are industry standard and also, by their nature, reflect the long-term nature of our partnership. There will be 10 plus 10 plus 5 plus 5 years. In addition, Ooredoo commits to 1,800 additional tower builds in the next 5 years. If we have more demand above this, the tower company will have a right of first offer for those additional demands. In addition, this new tower company will have a substantial consolidation opportunity in the Iraqi market. We combine the previously owned Zain sites with the Ooredoo sites, and we believe that there is a substantial consolidation opportunity with a benefit sharing that goes to both anchor tenants as well as new task. To give you a size of dimension, the new company will have about $500 million of revenues, about 200 million EBITDA after leases, which constitutes a margin of 40 to 42%. You will see, based on these financials already in the margin, that this is a very balanced deal, which gives both the tower company a solid, healthy financial operating margin, as well as helps our opcos to kind of pursue further investments into their business. Beyond the healthy financial situation for the new tower company, but also for our operating companies post-deal, we'll put in an effective capital structure that basically will reflect a gearing and leverage ratio that is industry standard. If we move on now, to give you an idea, the new task, as we call it, will not only be the leading tower company in the MENA region with about 30,000 towers once all of the markets close, but will be also the number 14 to 15 globally, so is quite a sizable and scale operator in the tower industry. In the MENA region, new task will be around 10% market share, which we expect also going forward to potentially further increase with the demand of its tenants. The new company will have operating scale for standardization, for example, in site build, in procurement, or to basically pursue energy savings initiatives that also will benefit the ESG ratings of both anchor tenants. If we move on from here, we think from an Ooredoo perspective, it's a good deal for us, not only because we have a nice value to share with you in one of the next charts, but also because it helps us operationally. We have very solid SLAs in place. We have a clear approach to new site delivery. We have also the ability to protect our strategic interest with a strategic site concept. In addition, we have also consumer price inflation in some of our markets. The operating companies are protected by caps and collars on the CPI increases. In addition, there is only a partial flow through of those CPI increases to basically Ooredoo. Furthermore, we have a currency protection from basically fluctuations, given that the service rent fees are basically paid in local currency. In addition, we have a synergy participation for us as Ooredoo if and when the tower portfolios consolidate, as I mentioned earlier, in Iraq, for example. Furthermore, we have also mechanisms in place to benefit from tenancy uplifts for Ooredoo. And last but not least, as a key anchor shareholder, we will remain a substantial shareholder and will also participate in the value creation at new task. If we move on from here, I come to the value crystallization for Ooredoo. You see here basically a field of tower companies globally. It's quite a cash-rich business and with quite high multiples. We have separated here the mature markets as well as the emerging markets, as they see very different multiples in this context. We feel that with the current transaction, we have achieved for Ooredoo a substantial value crystallization with above average transaction multiples, plus also a relatively high asset value per tower. Math will tell you, with the amount of assets that we have, that we're looking at 1.7 billion asset value from the Ooredoo side in that transaction. We will have, as a transaction multiple, a 13.2 times EV to EBITDA after leases, which is quite in line with what you would expect with that portfolio. And that crystallizes for us and our shareholders also a value uplift, literally, of 1.0 to 1.1 billion. As the value of the towers has been dormant part of our portfolio. If we move on from here, this is the classical split that you will see between new task as well as Ooredoo. The passive infrastructure and the management of that passive infrastructure, inclusive also of security and so on, will be with new task, while the Ooredoo opcos will retain their active equipment and their active operations. So that's our job, and over there is a clear job for the tower company to optimize rents, for example, to make sure our assets are protected with security and so on. If we move from here, a very simple logic that applies to any tower deal globally. The sooner you can bring on more tenants, you have a substantial operating leverage. Your profits will grow over proportionate. So as part of this transaction, there's obviously the question, are we able to grow tenancies? I will come back to that in a second and show you comparative numbers on this. The typical value levers is, for example, the rationalization of land leases and rentals. If you look at outliers in your portfolio where you pay rent, you might want to reallocate your sites. If you look at cost and investment optimization, you can basically pool demand for maintenance, for example, or you can standardize site builds. These are typical levers deployed by tower companies, and as a shareholder, we will benefit as well on the Ooredoo side from this. In addition, as I mentioned earlier, the onboarding of new tenants drives very favorable economics at the tower company side and makes a non-yielding asset a yielding asset with a nice growth of profits attached to this. Last but not least, also efficient financing structures come into play in the tower business, where you have more like steady and reliable yields at play that allow different leverage structures, and we will use that as well in the context of the new tower company. If we move on from here, for the tower company as such, I think we look at very attractive economics going forward. Once is for us the continued surge in mobile data demand. Industry observers, one being, for example, Ericsson, expect that the traffic per user grows 2.3 times in 28 to what we have in 23. This additional data demand requires more towers being built or being occupied basically via tenancies. So there is at hand already tenancy growth that you would normally expect in this context. In addition, a lot of the countries that we look at, I mentioned 6 countries we operate, 4 of them had no 5G launch yet, or only a very recent launch, for example, also 4G. So the densification of these networks for the surge in data traffic is a very clear tenancy growth opportunity. In addition, the tower company will operate as an independent tower company. The management team will be independent despite 2 key anchor shareholders and act as such on the market. All of the relationships are at arm's length, and hence we see here also opportunity to attract other tenants to these towers, which has been shown already, for example, by Task in Jordan. In addition, number 4, you have Ooredoo as well as Zain as really reliable anchor tenant. We're investment grade on both sides, so the income stream from the committed tower tenancies is there and probably not to be doubted going forward for the tower company. Plus, you have operating leverage, also being the largest tower company in the region, with a lot of opportunities for synergies, for efficiencies that are basically there to basically leverage in this transaction and also operating this deal. If we move on, I think we're known to you since we're together today here. Ooredoo will have a 49.3% ownership in the new joint venture. Zain will have another 49.3% ownership, and that means also the total enterprise value of the combined entity is 2.2 billion. I mentioned earlier our assets 1.7 billion. There is a cash payment to equalize the value on both sides to Ooredoo on this. For us, this is a strategic partnership. It's long-term, as I said in the beginning. We're looking at 10 plus 10 plus 5 plus 5 years. That's 30 years in total if it gets renewed at every point in time. And that is something you entertain a marriage. That's why the new Task will be basically our primary provider for passive infrastructure, as well as that will be most likely for Zain in this context. And in addition, the interesting piece to this is the new Task will factually be a first mover in most of its footprint markets. And by this, establish basically the seeds for a completely new tower industry in the region. If we move from here, you see what I mentioned earlier with data growing. You see on the one axis here data usage per SIM, which is in the process of going further up. You see how many SIMs, basically customers per site you can support. And there's a clear tendency in correlation. The more data you have, the less SIMs per site you can have, meaning the more towers you have to build, which is good for the tower company as it's indicating a growing business. This, if we move on from here, comes with a very low tenancy baseline of the new Task. You see here the comparative ratios at other tower companies. At the very extreme, you see Crown Castle with 2.5 tenancies per tower, while the new Task starts with 1.05. In between, there's a lot of growth possible, and we hope also that this opportunity is used, for example, to drive ESG ratings and have the right activities there also for all of the wireless operators to be really, environmentally friendly, safe energy on basically coming together on a co-location on one of the sites. The towers per se are mostly in their majority in number 1 market position countries. So that means the tower company has as its anchor customer a number 1 operator. So as such, this is a very, safe position. If you look at also the relevance of Iraq in this context is quite huge. And I mentioned earlier the consolidation opportunities in context of Iraq. That should give you a flavor on the actual investment opportunity that is there with new Task. If we move over to the next chart, new Task will operate as well in quite solid economic environments, macroeconomic environments. There is economic growth in literally every market. In Kuwait, we have a special situation here, given that we had a very strong 2022. You have very limited currency risk because of pegged currencies, and even in those countries where the currency was not pegged, you see limited exposure to basically currency fluctuations. With that being said, the new Task operates in a very solid and attractive macroeconomic environment. And if we move from here, the next step in this transaction after being in an attractive environment is how do we get this done now? We're looking at a carve-out approach in 8 dimensions. All of them are prepared. are ready to be executed. We are moving along these streams, have basically prepared as much as you can prepare prior to assigning already the steps that are required to move out the operations. And that is what we do next. In addition, there is basically completion as a next step. We expect the first countries to complete and close in the first half of 2024. The completion of all countries, as of now, we expect by Q2 25, subject that all of these regulatory approvals are being available. In several of the countries, as I mentioned, New Task is the first mover. So there is an emerging regulatory framework that is basically growing with us into this transaction to a certain degree. As such, we still expect that to be completed and available by Q2 2025. If we move on, maybe a few words to how does that transaction show on our financials. First of all, I mentioned we are 49.3% shareholder in New Task. It will be an independent tower company run by an independent management team. This ownership becomes basically effective after the first close. Afterwards, at each closing, it's a staggered closing. Basically, the relevant Ooredoo towers will be contributed to the tower company, and there is respective value exchange for the towers that we inject. The TowerCo financials will not be consolidated into Ooredoo Group, and New Task will be treated as a joint venture company. Ooredoo will not consolidate the tower company debt, and the TowerCo is expected to raise its own financing to the industry standards of leverage in this context, but has obviously the support of two anchor shareholders. So with this being said, I want to express a big thank you to the teams that have been involved getting us today to this point, both on our partner side as well as on the Ooredoo side. It has been an amazing journey over more than 2 years. It is a complex transaction, hence we're very happy today to be at this point. Stay tuned. We hope we can close these countries very soon as to our timeline, and stay with us in this context. Thank you very much for your attention.